Okay, yeah, I see live on Facebook.
We are live on Facebook. Are we live on Facebook now? We are live, ladies and gentlemen, with the legends here. So, Manuel Angel. So, can you share with us a little bit, Manuel? We get a lot of clients. We have many home buyers now watching this video. They are asking on how to win in multiple offers, especially in today's market. But before we do that, Manuel, why don't you do a quick introduction about yourself and give us an update what's going on in the market today?
Yeah, hey everyone, my name is Manuel. I'm with Doorway Home Loans, and I appreciate you taking the time to spend with me going over the loan process. First off, I'd like to share with you where we are at in the market. The mortgage rates, 30-year fixed rates, are tied to the 10-year Treasury, and the 10-year Treasury has been trending upwards. So we do expect the rates to go up a little bit higher, but not too high, as the Federal Reserve has indicated they do want rates to stay low, especially where we're at in the market. Now, regardless of what the rate would be, you as a borrower would have to qualify for that mortgage in the first place. And what most individuals think is that you just have to submit your application, you send in your taxes, your W-2s, pay stubs, bank statements, and that's it. You're good to go. You're ready to buy a home. But that's just the beginning. Once you submit those documents to us, there is a process where which we review your documents and assess your income and your credits. That's when we submit it to processing for review and have the underwriter look at your files. And when the underwriter looks at it, even though you submitted everything on the initial loan submission checklist, there still will be some other items that the underwriter will want to see from you. And today I'd like to go over some case studies. I have 3 case studies for a purchase of an owner-occupied home, a refinance of an owner-occupied home, and also a purchase of an investment property. And I'd like to share with you the processing submission needs list as well as the underwriting needs list, because those are all documents that are in addition to the initial taxes, bank statements, that initial loan submission checklist.
That's awesome. Hey, you guys, when you're watching this video, comment below if you have any questions. Manuel's gonna address it. Share this video. Share this video. Hit likes. As Manuel preparing real life case studies here, right? So we want to help as many people, as many families to win and to this market. So Manuel, I think you can share your screen, right? But hey, you guys, hit likes and share this video to as many home buyers and real estate agents as possible. Back to you, Manuel.
Awesome, thank you. So I'll share my screen now. So this here is the loan process, the home loans process. I've kind of simplified it for you. Essentially what we do is we'll take your file and take it through pre-approval, and then you'll get the conditional loan approval, which will then allow you to go through escrow and closing. Okay, now the steps that I want to go over with you are the pre-approval process. So essentially what we look at is, for one, your credit, your financials, and your debt to income ratio, and that will allow us to then calculate what's the maximum purchase price for you to buy your new home. So just to begin, so like I mentioned, we look at your credit, your financials, your debt to income ratio, and that'll help us determine what the maximum purchase price or maximum loan amount will be for you. And at that point, we can submit your file to processing and underwriting. Okay. Now your interest rate for your mortgage will be based upon your FICO score. So here, as you can see on the screen, depending on what your credit score would be, the highest tier would be a FICO score of higher than 740, and that'll get you the best rates in this scenario. It'd probably be around 2.7 in terms of interest rate. Okay. Now we look at your FICO score and your minimum monthly payments. With that, we also then look at your financials in terms of your income as well as your debts, any existing house payments you may have, your car payments or credit card payments. Okay. We also assess your net worth in terms of how much liquid assets you have, as well as any existing liabilities that are on your credit report. Okay, with that, we're able to then calculate your debt to income ratio. For conventional mortgages, you're looking at a maximum debt to income ratio of 50%. That means if your income is $10,000 per month, your maximum debts should be no more than $5,000 per month. And if you have existing credit card debts or car payments of $1,000 in this scenario, that would mean your maximum payment on your mortgage would be $4,000 per month. Okay, now I want to go over the items that we need for pre-approval. Okay, and what we look at are your last 2 years' taxes, W-2s or 1099s, bank statements, asset statements such as your IRA, 401k, 403b, mutual funds, CDs or stocks, and 1 month's pay stubs, along with your driver's license and 2 years' work history. It's crucial that you have at least 2 years of work history in order to qualify for a conventional mortgage or FHA. Okay, now, like I mentioned, this here is just a preliminary list of items that my underwriter will look at in order.
Manuel, sorry to interrupt, Manuel. We have questions here. What is an FHA? We have people asking this question. What is FHA?
Yeah, FHA is a mortgage that's insured by the Federal Housing Administration. Okay, and that allows you to purchase homes with a little bit higher debt to income ratio. Remember, I mentioned that the maximum debt to income ratio for a conventional mortgage was 50%. That means of your income, only 50% of it can go towards your new mortgage. For an FHA loan, they allow a debt to income ratio of up to 55%. So your monthly payments plus your existing car payments or credit card payments can go up to 55% of your income. Also, FHA allows for lower credit scores. Before, FHA could go down to a 580 FICO score. At this time, there are additional overlays with us, and we like to stay at least at a 620 FICO score for FHA.
What does it mean, Manuel, when you say no overlays? What does it mean?
Okay, so if your credit score is below 620 or 640 and you're looking to get an FHA mortgage, there are additional parameters or qualifications that you need to meet in order to qualify. And one of them is you need to have no insufficient funds within the past 2 months, actually the past 12 months. So there should be no late payments or actually no overdrafts on your bank statement that should be shown in the last year. So that's an example of an overlay.
All right, thank you. You can continue.
Okay. Yeah, so like I mentioned, this is just the initial preliminary checklist that we look at to assess your income and your credits. Now, I want to go over, well, once we have all those items, I'm able to then submit. Once I have your full file, I'm able to submit it. Okay, I'll have your credit report and the desktop underwritten approval. Then I send your file over to the loan officer assistant, which will then send out the verifications of employment, which pretty much they fax out a document to your employer to confirm the details of your employment. And then we'll also initiate the disclosures like the loan estimate that'll lay out the terms of your mortgage. And then we'll also lock the rate. Well, we can lock the rate now or later once it's been underwritten and approved. Once the loan officer does his thing or her thing, it'll go to the loan processor who will then verify the financials and organize and package the file to then be submitted to the underwriter. Once it's in underwriting, they'll ascertain any conditions that are needed and provide the conditional loan approval. Now that conditional loan approval is crucial for you to be able to get the funds to close your transaction. Now I also want to go over some example conditional loans, sample conditions that were on previous loans in my case study. Okay, so some examples would be credit letter of explanation. Maybe you had several late payments, we'd want to have an explanation on that. Maybe on your bank statement, you'll have large deposits that need to be sourced. And then also for conventional mortgage, we do want to ensure you have sufficient reserves post-closing. Usually it's about 3 months worth of interest to remain in your bank account post-closing. Okay, and another example of conditions are hazard insurance, the appraisal, and maybe an updated credit report depending on when the initial credit report was first pulled. Okay, so now let's go over our case studies.
Manuel, can you summarize one more time again your roadmap? I love your roadmap.
Okay, yeah.
People love that, so people want to see one more time. Can you recap just in summary, in conclusion?
Yeah, so this is the entire loan process here.
Yeah, we can see.
Awesome. So pre-approval, there's three phases that I like to put it in: pre-approval, escrow, and then closing. Okay, part one or section one is pre-approval. That's where we look at your credit score, your financials, your debt to income ratio, and the maximum purchase price or maximum loan amount. And then we submit it to processing and underwriting. Then you should have the conditional loan approval, which will allow you to then open escrow if it hasn't been opened yet. And then we'd be able to order the necessary reports like the appraisal and the preliminary title report. Once that's done, and you receive the loan approval, then we'd be able to proceed with the loan documents. You sign loan documents, then we can fund, and then we're able to close. So that's kind of the gist of it. It's a little more simplified than it really is. Okay.
Love it. Yeah, that gives a good overview, Manuel. Many first-time home buyers, as well as many people who are not even first-time home buyers, Manuels, they buy homes, but nobody really explained what actually happened. So, love this. Love the home loans process.
Yeah, so that's just a simplified version. There's a lot more to it, but I can go into that a little bit later. But for now, I want to go over the case studies. That way you can get a better sense of what the processing needs list would be, as well as underwriting conditions. So I have 3 case studies. One is a purchase in Walnut for a home, and then one is a rating term refinance in Claremont, and the third one is an investment property purchase in San Bernardino. Okay, so these kind of just lay out what the terms were. This is a 30-year fixed at 2.75% interest. Okay, this one was also a 30-year fixed at 2.75 interest. And this one was at a 30-year fixed at 3.5%. And then you can see the date that they were closed, the loan amount, the loan to value. So the first case study I want to go over is the purchase in Walnut. Okay, so as you can see here, it was closed on November 16th, and it shows me as a loan officer. Okay, and remember I had told you that the initial process to get you approved is to submit your taxes, pay stubs, bank statements, things of that nature. Those are just the initial documents we'll need. Once the file is submitted into processing, the processor will also request additional documents. And then once she submits the file into underwriting, the underwriter will ask for additional documents. So here, this breaks down some of the additional documents that were needed on this file. So example, present housing expenses, profit and loss statement, because the borrower in this case was self-employed. So we needed to see his income and expenses for 2020 up to the month of September. Okay, and then also we needed their business tax returns, which wasn't included in the initial loan submission package, and then verify which bank that they'd use for the down payment, because they sent in bank statements for different accounts, and we weren't sure which account they'd be using funds for the down payment. Okay, now this just covered what the processor needed. Once it was in underwriting, the underwriter also needed these documents here. So example, for one, there was a letter of explanation for the credit. So the wife had multiple variations of her name. We needed to get explanations on that. Okay. the letter of explanation for the address, because there are different addresses associated with their names, the borrower's business license because he was an entrepreneur, proof of the earnest money deposit clearance. That's just to show on your bank statement where the transaction was that you had sent out the earnest money deposit. They need to source that. And then also 1040 transcripts, W-2 transcripts, proof that the taxes have been paid for 2019, and appraisal reinspection. So the appraisal reinspection is only needed, or usually only needed, if there's one of three things that are missing: a double strap water heater, carbon monoxide filters, carbon monoxide detector, and also a smoke detector. So those three things you want to make sure the house has right before you order the appraisal. Otherwise, the appraiser will have to reinspect it, and that's another $175 fee. Okay, so that was the purchase in Walnut. Now, for the rate and term refinance in Claremont, this was a little bit more easier because it's a refinance, and I don't know, for some reason they're just a little bit easier. Here, the processing needs lists were very minimal. All we needed was the Homeowners Association monthly billing statement, the Homeowners Association certificate and master insurance policy, and then insurance declarations and the most recent mortgage statement. And when we submitted to underwriting, there were no conditions needed. So I like these type of transactions because you just submit it to processing, and then you submit to underwriting, and bada bing, bada boom, you're ready to close. Here, this investment purchase in San Bernardino was a little bit more complicated, and there were a little bit more items to provide for processing and underwriting, which we'll go into. Okay, so as you can see, this closed on December 8th. Okay, and so these processor needs, they needed updated pay stubs. The ones that we had were outdated. Clarification on the co-borrower's base pay, because her verifications of employment, which we had sent out to her employer, did not match the pay stubs that we had received. So that discrepancy had to be resolved. Okay, and then also on the taxes, there was a page that was missing on the Schedule C. So it's crucial to ensure that your taxes have all pages on it. And then the borrower also owned another property that was owned free and clear, and it wasn't stated on his application, so we had to include that also. And then in terms of underwriting conditions, we had to show that he did have a collections, that he owed money to a timeshare company in Mexico, and because that showed up on his credit report, we needed to see that that was paid. Okay, so it's crucial to know what's on your credit report when you pull it. That way, whether you have to get it paid off or not is important. And then also, we needed a letter of explanation to show the discrepancies between the previous addresses he had owned and lived at. Okay, and then there are additional processing needs. We needed a business profit and loss statement because this borrower was also a business owner and entrepreneur. Okay, his business license, we needed to know what account they'll be using to close. And then also, since the funds were going to be coming from his retirement account, we needed terms of withdrawal from the Charles Schwab retirement account. Okay, and then we also needed to source several large deposits into his bank. Okay, and then Venmo deposits. So it's crucial to make sure that your bank statement, the last 2 months bank statement, are clean before you submit a loan application. Because I mean, if you do have large deposits like this or questionable transactions like Venmo deposits, we will need to source that to comply with the Anti-Money Laundering Law and the Bank Secrecy Act. Okay, we need to make sure that you're not laundering money. Okay, and in terms of additional conditions, we needed to make sure that they had additional reserves to close and document the source of funds for earnest money deposit. So with those items, we were able to get the loan closed. But see, the one thing I'm trying to get across to you is even though your loan officer will request your taxes, W-2s, pay stubs, bank statements, that's just the beginning. There's so much more other items that could potentially be requested from you once you open escrow. So that's really the main gist of what I want to convey to you.
I guess that's where a lot of misunderstanding, right, Manuels, between the consumers and the real estate agents, because the first time home buyers, they think, hey, I already given you my W-2 pay stub tax return.
Yeah.
Is that kind of common?
Yeah, exactly. Or they'll say, "Oh, I've already given you so much stuff. Why are you asking me for more stuff?" Well, I like to manage expectations up front so that you know what to expect during the entire process. Because it's not just you submit a loan and then your loan officer and the lender does their work and then you close. You're going to be involved every step of the way, and you will be working. I mean, you're going to be required to provide the requested documents for processing and underwriting. So if you think that you're going to open escrow and then you could just go to sleep and wake up and now it's closed, that's not how it works. You do have to actively partake in the process. So it's a team. You're working with the team, and you're part of the team. Teamwork makes the dream work, and it's crucial for you to comply with all the necessary documents and provide them in a timely manner. That way there's no delays in escrow. Okay, and then the next thing I want to go over are the contingency removal dates. So here is a breakdown of a 30-day escrow. Let's say you opened escrow on the 1st of January. We'd want to make sure that the escrow company sends out their fees to us, such as the escrow fees, title fees, things of that nature. And that information will be put on our initial loan estimate and disclosures, which will be sent to you to be reviewed and signed. It'll lay out the terms of the mortgage. I have a sample here. Okay. So your loan estimate will show the basic terms of your loan, like the interest rate, your loan amount, the monthly payment. Okay, and then also your cash to close. So this will show how much cash you'll be required to come in with, and taking into consideration your down payment and closing costs. Okay. Once you have the loan estimate, we're able to then order the appraisal. Okay, that appraisal usually takes 7 to 8 days to come back. Once the appraisal is completed, that's usually when you'll have your contingency dates timeline to start. So there's 3 contingencies usually: the inspection contingency, your appraisal contingency, and the loan contingency. What that means is, here in this case, I have a 14-day inspection contingency, a 17-day appraisal contingency, and a 21-day loan contingency. That means if by the 14th day you do your inspection, but you don't like the home for whatever reason, you see during the inspection there's a problem with the foundation or the roof or the plumbing, you can cancel escrow by the 14th day and still get your earnest money deposit back. The appraisal contingency means that if by the 17th day you get your appraisal back and maybe the value came back lower than what you're buying the property for, you can also cancel escrow and get your earnest money deposit back. You would only do that, let's say, if you're buying a home for $500,000 and maybe the appraisal comes back at only $480,000. Well, you have a decision to make. Either you come up with the difference, the $20,000 difference from the $480,000 to the $500,000 purchase price, or you can cancel escrow at that point. Okay, but as long as you're within the 17-day loan contingency period, you'll still be able to reclaim your earnest money deposit. Because the last thing you want to do is forfeit your earnest money deposit on a loan or on a home that you're not even going to be buying. Yeah. And then also the loan contingency means that if by the 21st day, for whatever reason, you can't qualify for the mortgage, then you'd want to cancel escrow at that time or find out a way to resolve the situation with the loan. Okay? I mean, this could something could occur. Maybe you may have lost your job, or maybe you're getting less hours. All that is taken into consideration. So we want to make sure that you have a consistent hours and your job is not at risk to any type of external circumstances like COVID or things of that nature. Because I did have
That's also common, huh, Manuels? So let's say you approve me today. Let's say I'm buying a house, and then suddenly tomorrow they cut my hours from working 40 hours to 20 hours. Then that will affect this, correct?
Yeah, yeah. Or I had another client who last year he was in escrow, and then while he was in escrow, he changed jobs into a new field of work, which definitely inhibited us from being able to do the loan. Because remember, I had told you guys that you need at least 2 years experience or 2 years of work history. That work history has to be within the same line of work. So if for the last 2 years you're working as a teacher, but then you switch jobs and now you're working as a karate or you're a karate teacher, or maybe you're looking to do loans, mortgages. Well, the last 2 years you're doing teacher work and now you're doing loans. Those aren't in the same field of work, and you need to have consistent employment. Okay. Now, once the loan contingencies are signed and everything's good, you receive your conditional loan approval, and you've met all the conditions, and now you're clear to close. We're able to send out the closing disclosures. And then after you sign closing disclosures, there is a 3-day waiting period for you to sign loan documents. Okay. And then once you sign loan documents, we can fund the next day. And depending on what county you're in, the escrow company will be able to close the next day. And that's a 30-day escrow.
That's awesome, man. That's really detailed. Can you share, Manuel, some of the real life mistakes or some of the real life cases that people don't really pay attention to, either the home buyers or the real estate agents themselves?
Yeah, I mean, I've had several cases where there just some little missed things could hinder the loan from closing on time. Okay, like for instance, the appraisal could be scheduled later than it should be. Like maybe there's tenants living in the existing home that's being sold, and they can't schedule a time in which the appraiser could visit and inspect it. So if that's the case, that could hinder or extend the timeline on closing. Another thing is if the purchase contract isn't written up to what the initial loan it was submitted as, that could also hinder the timeline to close. But I mean,
suddenly they buy a car. How about that, Manuel? Buy a car.
Yeah, if they buy a car or they max out their credit report, their credit cards, because we will also do a credit refresh, which means we'll look at your credit again to see if any new credits have been opened from the time we last saw your credit report. And I mean, if you bought a new car and now that's a $500 payment, that could throw off your debt to income ratio and inhibits you from being able to qualify.
What if I just paid down some of the loans? What if I don't call you and suddenly I just pay off whatever, I pay off my student loan, I pay off my credit card and things like that.
That's good. That would help us. That could potentially lower your raise your credit score. And if that were the case, we'd be able to do something called a rapid rescore and retain your new credit score after you pay down those balances. Like I had a client who, remember I had told you that the minimum FICO score that we want for an FHA is 620, 640. When we pulled a credit report, it was less than 620. So what I had her do is pay down her credit card balance, and that helped increase her score up to 640. And what we did is we did a rapid rescore, re-pulled her credit, and now she's able to qualify. And then sometimes you may have a borrower, or you, for instance, may not be able to qualify for yourself based on your income. If that's the case, maybe you can bring on someone else, a family member, your spouse, who can then add their income to help you qualify for the higher loan amount. Yeah.
And thank you.
Yeah, and so that's pretty much the gist of it. I wrote a book where I lay out all this. It's called the Home Loans Book, and then I also have a webinar that I'm working on. These are slides from my webinar, so hopefully I'll have that coming out within the next couple of weeks or next week, and be able to share that with you all as well.
Can you share with everybody what's in your book, The Home Loans Academy? Is that the title
Oh
of your
yeah,
book?
this is a home loans book, and then it'll lead to the Home Loans Academy. So
Okay, home loan books.
this just breaks down what I went over here, the loan process, and also the different loan types. So here it says introduction to home loans, the different types of home loans, and then also the process.
So Manuels, we have many home buyers, investors, as well as real estate agents watching this now, and they're asking like, how do we get access to your book? Like if they want to learn more about the home loan process.
Oh yeah, so this book, I have it for free. You can visit it at thehomeloansbook.com and get a copy. I'm still having it proofread at this time, but I have it already on Amazon. But yeah, you can visit this website. You can get the free digital copy, and then you can contact me via email or my website, and I'd be more than happy to share with you the bonuses that are in this book as well.
All right. Anything else you want to share, Manuels, with home buyers, real estate agents, investors watching this?
Yeah, I would say one thing that you want to keep in mind when you're in escrow is to stay calm. If there's anything that's going wrong, just understand that there's always a solution to it. And if there's any delays, you can also get in touch with the seller, and more than likely they'll understand the situation. But the biggest thing that I want you to take away is having your file reviewed by an underwriter prior to you opening escrow. Because the last thing you want to do is open escrow and you haven't fulfilled all the conditions for processing and underwriting, and then you have to release contingencies tomorrow. Yeah, like that's the last thing you want to do. So you want to have all the contingencies met prior to opening escrow or anything like that. That way you'll be able to kind of foresee what will be needed for processing and underwriting at that once you open escrow.
Right, and what is the best way to get in touch with you, Manuels?
Yeah, my phone number is 323-605-7009. And then I also have my business card. You can see here. I'm not too sure if it has my information. So you can see my
Manuel, maybe can you unshare your screen so that way everybody can see your business card clearly? So the phone number is, what is it again?
323-605-7009.
All right. Okay, so that's Manuel's Angelus, right?
Yeah, Angelus.
Manuel Angelus with Doorway Home Loans. And Manuel, thank you for your support here at your Home Sold Guaranteed Realty. You're helping a lot of our VIP buyers clients here. So thank you for everything you do for our VIP buyers clients here. Okay, have a good day, everybody. Put it on the comment below. Thank you, Manuel. If you learn at least one thing, comment below to appreciate what Manuel has done, and also share this video, share it on your Facebook, share it on your friends. And if you guys have any question about home loan process, contact Manuel. If you are thinking of buying or selling a house, your Home Sold Guaranteed Realty, 626-789-0159. Again, 626-789-0159. Have a good day, everybody.